Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with the major EURUSD. Tin Lao presents. On Wednesday, the EURUSD pair continued to rise and consolidated above the 50 Fibonacci retracement level at 1.1320. As a result, the euro may continue appreciating toward the next resistance zone of 1.1374, 1380. A consolidation below 1.1320 would favor the US dollar and trigger a decline toward the support zone of 1.1260, 1282. The bullish trend is gaining momentum once again. The wave structure on the hourly chart is beginning to shift. The most recent upward wave broke above the previous high, while the last completed downward wave failed to break the previous low. This confirms a transition to a bullish trend. While news about successful negotiations between the US and China and a hawkish Fed stance briefly supported the bears, Donald Trump's policies are once again placing heavy pressure on the US dollar. On the 4-hour chart, the pair reversed in favor of the euro and consolidated above the 100% Fibonacci level at 1.1213, signaling the possible resumption of the bullish trend, also confirmed by the wave structure. Growth may continue downward the 127% Fibonacci retracement at 1.1495. No divergences are currently forming on any indicators. Here is Laurie Bailey with pound sterling dollar pair forecast. Let's have a look. Yesterday's inflation data for April in the UK surprised market participants. Core CPI jumped from 3.4% year-on-year to 3.8% versus an expected 3.6%, while headline CPI reached 3.5% year-on-year compared to March 2.6% and the forecast of 3.3%. The monthly increase stood at 1.2%. These figures are unlikely to leave the Bank of England indifferent, and investors have pushed the yield on 5-year government bonds up from 4.15% to 4.26% by this morning. The British pound ended the day up by 26 pips. The price is breaking through the 1.3433 resistance level on the daily chart. It's evident that the pound is targeting the upper boundary of the price channel at 1.3565 and then the key target at 1.3635, the 4-week resistance from January 2022. The Marlin oscillator continues to rise in positive territory. On the 4-hour chart, the price must firmly consolidate above 1.3433 level. If it does, the Marlin oscillator will break out of its current range to the upside and provide even stronger support for further price growth. That's all for today. Wish you best of luck.